Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippines is still pushing Washington for lower reciprocal tariffs, even after President Trump exempted most agricultural exports. Many other Philippine goods remain hit by a 19% duty. The Bureau of Customs is maintaining its 958.7 billion peso target for 2025, despite a 3% drop in import volumes and fewer working days last month. Fitch Ratings expects Philippine banks to stay steady in 2026, but warns that rate cuts and a widening corruption probe could weaken loan demand. The Philippine Chamber of Commerce says strong Christmas spending and improving business sentiment should lift MSMEs through the holiday season. The global trade outlook is starting to shift as the United States begins rolling back part of the tariffs that have been weighing on Asian exporters, including the Philippines. The government says conditions are improving after Washington relaxed a wide set of duties. But Manila is still fighting to remove the 19% tariff that continues to hit many non-agricultural Philippine exports, particularly manufactured and industrial goods. What has changed? President Donald Trump has lifted that duty for more than $1 billion worth of Philippine farm products, including coconuts, bananas, and processed fruits. Officials say that the move brings badly needed certainty for exporters, but analysts warn, however, that the overall impact will remain limited until non-agricultural tariffs are also reduced, and the Philippines regains competitiveness lost during the tariff period. And those trade shifts matter because they directly feed into government revenues. The Bureau of Customs is still targeting 958.7 billion pesos in 2025, despite a 3% drop in imports last month. Typhoons and fewer working days slowed collections, but Customs still pulled in 701.7 billion pesos in the first 9 months, 73% of its full-year goal. The agency is banking on petroleum imports to offset weaker volumes elsewhere, with the rice import ban expected to wipe out more than 6 billion pesos in duties. Seizures of smuggled goods reached 3.6 billion pesos, with half handled by Customs' new enforcement team. Economists say Customs can still hit its target, but only if import volumes rebound as global trade realigns. The Philippine IPO market may have been quiet this year, but Deloitte says it still has strong upside potential, with quality deals pointing to healthy investor interest. Maynilad Water Services raised 34.3 billion pesos, the biggest domestic listing since 2021, while Top-Line Business Development also went public in Cebu. Overseas, Philippine-based Hotel 101 made its NASDAQ debut in July with a market value of about $1.36 billion, a rare global listing for a homegrown brand. Across Southeast Asia, Deloitte says high-value IPOs are driving regional momentum, and investor appetite is expected to remain strong heading into next year. Philippine banks are expected to hold their ground in 2026, even as interest rate cuts threaten to squeeze lending margins. That's according to global credit rater Fitch. But Fitch warns that a widening corruption probe is hurting business confidence and could weaken the demand for new loans. The economy is still projected to expand 5.8% next year, providing a resilient backdrop for lenders. Banks' shift toward higher yielding consumer loans may help offset margin pressure, though that also brings rising credit risks. Fitch sees room for another 0.5 cut in policy rates by year-end and is maintaining a neutral outlook on the banking sector. The agency adds that slower government spending could ripple through banks with exposure to infrastructure projects. Retailers are remaining upbeat this holiday season, crediting Filipino resilience even as political and economic headwinds persist. The Philippine Retailers Association says holiday sales should get a boost from strong consumer spending and overseas Filipino worker remittances, still the economy's most reliable drivers. The Philippine Chamber of Commerce and Industry is echoing that optimism, urging businesses to maximize digital platforms and prepare for what they expect to be a solid holiday surge. And as always, the Christmas season does more than lift traditions and Filipino spirits. It gives the economy a boost as well. The Bureau of Customs now expects to lose over $6 billion in revenues from the extended rice import ban, a shortfall that could weigh on its year-end collections. From September to October alone, the BOC has already missed 3 billion pesos in duties based on domestic rice market prices. The agency's 958.7 billion peso collection target may slip to around 950 billion, but Commissioner Ariel Nepomuceno says they are not backing down from the original goal. Customs collections have reached 701.7 billion in the first 9 months, higher than last year, but still 1.4% below program. The country is facing a wake-up call on urban safety and oversight. Flood control corruption cases are now moving to the courts, and a major hillside development, Monterrazas de Cebu, has been found with serious environmental violations after typhoon-driven flooding. For developers, investors, and communities, the question is the same. How do we make sure urban projects are safe, compliant, and built to standard? Joining us now is Senior Undersecretary Henry Yap of the Department of Human Settlements and Urban Development, the agency that sets the country's land use and urban planning standards. Good morning, Yusek Yap. Thank you for being here with us.
Good morning.
Okay, let's start with a compliance temperature check. Given everything that's been going on with the flood control corruption scandals and the Monterrazas findings, what does this tell you about the actual level of compliance? How has that been over the recent years?
Yes, actually there is a great need now to review many of our plans. Many of our plans had been prepared several years or even decades ago, and there has not been updating by many of the local governments. In the case of Cebu, we noticed that many of the upland areas have already been authorized to provide the settlements area and other developments. And this has actually provided some issues and concerns to many of the residents in that area.
Yeah, we have to update the land use plans, especially in the wake of all of these climate changes. In the Cebu instance, in one day, they got 6 weeks worth of rainfall with Typhoon Tino. So these are abnormal weather conditions brought about by climate change. So you're saying that right now, how often are they updated, these plans? And we need to expedite that to make it how much sooner, how much more often?
Yes, we have provided a standard of 12 years for the updating of these plans. However, many of the plans that were approved previously were not climate change adapted, meaning that they were not risk-informed. They do not provide information based on environmental changes that we have noticed. So while there is a standard period for updating, the developments require that we check it from time to time. Let me use the example of Bogo City, which encountered an earthquake more than a month ago. They have an updated land use plan. However, the discoveries of new earthquake faults and sinkholes will necessitate the updating of those plans, and it cannot wait for another 10 to 12 years. No?
That's right.
So these are examples where the actual condition will dictate how often the review will have to be undertaken.
That's right. Based on the actual conditions, 12 years too long for a static plan. How dynamic do these have to be? From 12 years, do we cut it down to 5 years and then even a shorter depending on certain specific conditions?
Yes, if there are major discoveries like the earthquake fault and the proliferation of sinkholes, then the updating is immediately required. However, if there are not much changes in a locality, then normally we will encourage a midterm review, say 5 to 6 years, to look at environmental impacts, change in economy conditions. These are also factors in the evaluating of the comprehensive land use plans.
And just to put things into context, all of the construction permits, all of that comes from the LGUs. But you guys, with DSUD, you just give the license to sell. Is that correct?
That's correct. From a planning perspective, we start with the comprehensive land use plans. All the cities, independent component cities and highly urbanized cities need to get the approval of DSUD. However, for municipal plans, their approval is only limited to the provincial government. Mm-hmm. Now, when we issue the development permits and the building permits, they are actually done by the local government. What we monitor and issue are the license to sell. This is the authority for brokers and the developers to sell the units that they have been given permits to construct.
Yeah. In the case of Monterrasas de Cebu, it's DENR specific, so we can't go into that in terms of that. But we can talk about the core lessons. What has this taught regulators, the LGU, and developers about safety risks involving high-risk terrain?
In the case of Monterrosas, the rise is but one of only several projects. Actually, that project was developed in I think 2008, 2009. And the area covered about 150 hectares. But the present area that they're looking at, which is the rice, is only 3 hectares out of that 150. So we really have to look at it from a comprehensive way, not just pinpoint one specific area.
Yeah, so much to learn from that because, land is limited and growth is pushing projects to high-risk zones. And so we need to create better systems if we're going to be developing in those areas. Another thing, based on what you've seen, do you think that the Monterrasas, this issue with that development is an isolated case, or could there be more like it around the country just quietly waiting to erupt?
There's a possibility that there are also other areas that have the same predicament. It is hard to say right now. We don't have an inventory of that. But what we've been doing now is encouraging our provincial governments and governors to already undertake a review of all their land use plans. It is very important that we go through a comprehensive review of all these plans so that if we notice that there are some areas that have not been updated and post-environmental risks, we can immediately address them.
Okay. What do we need from the whole of government in order to make this work para hindi na po maulit yung nangyari sa Monterrasas de Cebu?
There is also need for many of our government agencies to interact and to compare notes. No? One of the problems encountered here is that different agencies have different mandates and they issue separate permits. So there is need for these agencies to also talk, to coordinate, to ensure that another agency knows what is the impact of another agency's permit to a specific project.
Yeah, these failures, they didn't start yesterday. The problems we're seeing today, it shows weakness across the board in the system for years. What are the things we need to do now to make sure hindi na to mauulit?
Okay, for example, when the river overflowed, we noticed that many of the easements have already been occupied by informal settlers. They should have been not allowed to settle in those areas. So naturally, when the volume of water reached that site, the water will look for open areas or to spread to where it can flow over. So many of the houses there were affected. So, in fact, during the visit of the President 2 weeks ago, the President has instructed the local governments not to allow families to go back to these no-build zones, to ensure that the problem and the catastrophe or the calamity does not happen again.
Mm-hmm. And let's talk about the effect and the impacts of the flood control cases and the Monterrasa findings. Oversight failures raise development risk. They delay financing and they push up insurance costs and they weaken investor confidence. From your vantage point at DSUD, Yusek Yap, how are these incidents affecting project timelines today?
Okay. Naturally, many of the people reviewing the permits now have to take more time to review it. They are afraid that eventually, if there is some investigation, they might be blamed for not doing their work properly. So that entails more time and resources to review the plans. At the same time, I am afraid that some might be too gun shy and would now impose many conditions. This is to again safeguard their own. And protect the way they approve the plans. And this would naturally cause impact in time and also costs on the developers
More
themselves.
Reviews, more approvals, more conservative timelines, more requirements. It seems like it's going to be even more difficult for the developers.
Yes, that would be one way to summarize the concerns. But I think it is a matter of all government talking together and discussing this collectively and interfacing with the private sector. We don't have to go to that extreme, but unless we take a proactive stance, that may be the consequence of what would happen.
Yeah, we need to take a proactive stance. Equally important, how do we strengthen enforcement, but also while doing so without exposing developers, legitimate developers, to harassment and extortion?
Yeah, I think what we need is to make sure that the monitor do not happen at the end of the project or only when a calamity happens. No, I think it is the role of government to regularly monitor and to take note if there are already deviations that they've noticed, to already call the attention of our developers. The idea is not to keep on issuing notice of violation, but to ask them to comply and to be cognizant of the problems that they may cause in the future.
Okay, last question. We're tight on time. What are the concrete steps we can expect from DSUD in order to rebuild confidence in oversight?
Okay. One, we've already issued a reminder to many of our governors, provincial governors, and we're asking also our regional office to issue these reminders to the local chief executives of the different cities and municipalities. Second, we've also tomorrow going to launch two programs, Plan Smart for human settlement. This is an automated system where we can gather data from various government agencies and then compile that data and prepare a first draft of the comprehensive land use plans. That way, instead of taking 2 to 3 years to prepare the plan, we can do it in an hour or 2 hours. The first draft can generally be prepared in that short time. That way, there will be no more reasons for local government to say they do not have the resources or the manpower to be able to prepare the updated plan.
Okay, Senior USEC Henry Yap, maraming salamat.
Thank you very much.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Let's check on how Asian markets are doing this morning. Right now, the Nikkei 225 is sharply in positive territory, up by 3.3% in early trade. Hong Kong's Hang Seng Index up, not by as much, up by just 0.3%. Shanghai's Composite up by 0.2%, and Singapore's Straits Times Index up by 0.3%. Here at home, the Philippine Index finished higher on Wednesday, up 1% as investors picked up cheaper shares. Bargain hunting and expectations of another rate cut by the BSP helped lift sentiment. PSE Index ended almost 1% higher to 58.13. Now, among these sectoral indices, only mining and oil closed in the red, with financials rising the most at nearly 2%. Now, value turnover was at 6.2 billion pesos. Taking a look at the main gauge this morning, as of 10:23, the PSE Index is in negative territory, down by 0.5% to 57.83 rather. All shares index going the other way, up by 0.6% to 32.72. Taking a look at the sub-indices, we're looking at a mixed picture. The industrial and mining and oil counters are limiting the market's decline right now. Total volume is at 431 million shares, valued at 9 billion pesos. Now, market breadth, we're looking at almost neck and neck with 57 decliners, 51 advancers, and 67 stocks unchanged. On the currency front, the peso opened at 59 flat against the dollar, slightly weaker than its previous close of 58.94. Let's take a look at how global financial markets moved overnight. U.S. stocks finished a choppy session higher on Wednesday, with tech shares leading the rebound after several days of losses. The S&P 500, however, remains more than 3% below its October highs. Gains narrowed mid-session after Fed minutes revealed policymakers are worried that further rate cuts could undermine efforts to control inflation. The Fed has cut rates by 1/4 point at each of its September and October meetings.
The last several sessions of the trading day, the last hour has been the most volatile, and that was true again today. A lot of people just simply trying to line up and decide whether they want to have a risk-on portfolio or a risk-off portfolio, and that's really been driving a lot of the late action that we've seen over the last 3 or 4 trading days. Unfortunately, it's ended up pretty negatively, so it leads me to believe a lot of people are choosing the risk-off option.
The Dow Jones Industrial Average ended lower by 0.5%. The FTSE, UK's FTSE, down by 0.5%. Germany's DAX flat with a negative bias, and France's CAC 40 down by 0.2%. Now, over in the U.S., The Dow Jones Industrial Average higher by 0.1%, S&P 500 higher by 0.4%, and the Nasdaq higher by 0.6%. In corporate news, San Miguel Corporation delivers a powerful 9-month performance, a bright spot for heavy industry and consumer demand at a time when business confidence has been under pressure. Core income jumped 54% to 60.3 billion. Now, operating income rose to 137.4 billion pesos, while EBITDA hit 194.3 billion pesos. Food and beverage drove the gains across major units. Petron lifted operating income by 20% and pushed net income to 9.7 billion pesos. Power weakened after asset deconsolidation, infrastructure edged higher, and cement continued to struggle against low-priced imports. San Miguel says it is positioning for a stronger year-end demand. In other news, a new study shows a major shift in Filipino youth priorities, with many aged 18 to 25 now seeing themselves as their household's primary earners. According to WR Numero research, young Filipinos are placing financial stability and family support above postgraduate studies, travel, or even moving abroad. The findings show they are taking on greater responsibility as they navigate political, social, and economic challenges. Despite the pressures, today's youth remain focused on uplifting their communities, starting with the most important unit, the family. As Christmas nears, the Philippine Chamber of Commerce and Industry, or PCCI, says the outlook is cautiously optimistic, with consumer spending and renewed business confidence expected to keep economic activity steady. Recent typhoons and political uncertainty could temporarily slow growth, but micro, small, and medium enterprises may still see a year-end boost as holiday demand picks up. The PCCI is urging businesses to leverage digital tools, keep operations resilient, and prioritize quality customer service during the peak season. The group says a solid holiday run could help lift communities and lay the groundwork for stronger economic momentum in 2025. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.